Hello, Clifford the 25-year trader back with another video. So today I wanted to go over a strategy that I find really good for people who want to trade the market part-time. Maybe they're still working a job or whatever, and they just don't know, they don't want to watch the market all day long, things like that. Or maybe they're trying to pass one of those prop firm challenges or trade a prop firm account, but again, they don't want to day trade. So I learned about this strategy many years ago, and I call it end of day trading. And basically, what you do is you pull up the market you're interested in. In this case, I'm looking at the Nasdaq Micro MNQ, and pretty much what you want to do is use the daily chart. The daily chart shows each candle represents 1 day of trading. So what I like to do is find a support and resistance level on the daily chart, just like this. I'm looking for support and resistance, floors and ceilings, floors and ceilings. So I see a floor here, right there. Market was rejected. So I know that this is a pretty strong level. And I see resistance up here because, again, market was rejected, pretty strong level. And as we see, market was rejected again here, and so on and so on. So now, let's say, I don't have a lot of time. And again, working 9 to 5 or whatever, but I want to trade this market. Well, what you could do is use an entry order. You could actually enter right at support down here, and you just place an order to buy at this level right here. Whether you're watching the market or not, doesn't matter. Put the entry order in, and then what I like to do is try and find the place where I have a high probability of not getting stopped out, because of course getting stopped out means it's a losing trade. So how can I solidify that? Well, one thing I could do is I could use Fibonacci. So like if I pull this up right here, Fibonacci retracement, and I measure the move from the high to the low right here. Let's measure this move out, right? There we go. Right there. And so now I know I'm going to buy here, right? But where should I put my stop? Well, if I see there's a Fibonacci 38% retracement level right there, why not put it under that? Because the odds are it might hold better than just putting it right underneath the lows of this support. So I go like this. And actually, we could place this trade right now. Let's say I have my prop firm account. I hit trade, right? I'm going to hit trade, and I'm going to buy right. Maybe I'll buy. I'm still going to buy at support, because the reality is if it hits this level, it might bounce right away. So I want that bounce. But just in case it pushes a little lower down here, I don't want to get stopped out too soon. So I put my stop loss, maybe like, let's use in this example, we'll do 60 points. Let's do $1,200, right? For those who don't know, the MNQ pays you $2 per point, win or loss. So $2 per point means if the market moves 10 points, 2 times 10, right? If it moves 60 points, 2 times $2 times 60, right? So that would be 120. But in this case, because we're using a prop firm example, let's just say we had $50,000 and we want to risk, 2%. We want to risk like 1,000 to 1,200. That's right in that 2% range, right? So I'm going to risk 1,200, $2 a point times one contract, and that'll give me a 1,200, about 1,100, $1,200 risk. But then finally, we want a profit, right? What I like to do is always put your take profit right at resistance. So slide it up here. This is the highest resistance, but we don't know if the market will make it there, right? Then we got this resistance here. I would say right in the middle. We don't have to be too greedy. Put it right there, right? So now we are risking, if we look here, 1,100 to make $4,200. And if you take the 4,200 divided by 1,100, it's almost 4 to 1. Okay, 4 to 1. So you're risking $1, right, to make $4, basically 4 to 1, pretty much. And that's one of the ways that you could do what's called end of day trading. And what I like to do is just every day check where the market closes. So like here's the end of today. So again, if it ever hits this level, I don't care if it takes a week, 2 weeks, a month. It doesn't matter. I don't have to watch the market. If it hits this level, my order is filled. And as long as we don't get stopped out down here at 1200, as long as that level holds, we are good. We risk and we kept the risk reasonable. You know, we only risking 2%. If I place this order right now, buy, right? There's the order. It's going to sit there. It's going to sit there forever. I mean, it'll sit there forever basically. Even if the market takes a month to get there, the bottom line is if it hits it and then it makes it to this target, you were trading while you were sleeping, possibly even, and you got a 4-to-1 trade. So, in my opinion, it's a pretty good way of being able to trade without having to worry about the stress of day trading. So, hope that helps some of you who may had been looking into another way to trade without day trading the market. I find end of day trading works great. If you enjoyed the video, feel free to like, subscribe, put your comments below. Look forward to seeing you guys in the next one, and good luck with your trading.